From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 30th, 2018. Today we're going to take a look at the USDCHF, the US dollar versus Swiss franc for today's trade analysis. But before I begin looking at the chart and today's analysis, it's important for me to recognize the fact that over the next several days, we are in bank holiday mode for many countries around the globe. You can see starting today, here March 30th, we have bank holiday for the franc, the euro, the UK, Canada. You go all the way into Sunday. You see New Zealand, Australia, bank holidays continue, even into Monday for the franc, the euro. We have in the UK many bank holidays for the next few days, Friday through Monday. So what that means is we have less traders in the market, lower liquidity, and likely less movement in the market. It becomes slower, it becomes a bit stale as there's no traders in the market to make anything happen. You can see also there's no significant news. Even for the countries that aren't observing bank holidays, there's no significant news on the calendar during this period that I'm showing to move the market, to be a catalyst for market movement. Unless we get some surprise information, then we don't really expect a whole lot of movement in the next few days. Now there is some news coming up on Monday after this that you see here, ISM manufacturing PMI out of the US at 10 a.m. on Monday. But prior to that, again, all of the bank holidays really just going to be the major factor in the market. So it may mean that it's more prudent to stay out of the market than it is to get into the market during a period like this. Okay, let's switch on over to the chart. I do want to take a look real quickly at the Swiss franc here. As we have observed, the long black trend line has been in an uptrend. Within this period of the trend, let's go ahead and zoom it in here a little bit on this black trend line. You can see these periods, and I've highlighted them with little short black trend lines that fall into support and then rise and rally, fall into support, rise and rally, fall into support, rise and new high, fall into support. And we've done that again. We've risen to a new high, 95.85, the pink shaded area at the top of the chart. And also now we have seen the market fall back down into support. We've seen that same pattern now shifting back down to the green shaded area. So if this pattern continues, we would now expect to look for support at 95.35, 95.10, the green zone, the market to hold here as it has within the long-term uptrend, and potentially bounce back up. Now, again, knowing that we have such a significant calendar with many bank holidays, I don't know if this is going to be the day that we really look for movement to happen, but expecting support here. We want it to hold here into this green zone in the pattern of the trend. And the change of this pattern, everything changes if it breaks this support, because then it's changed the pattern of the trend. If it gets under the green zone, then we may begin looking for lower highs and lower lows as we see a shift in the pattern. So the green zone is going to be pretty important for this trend. If it holds, we expect it to rally back once again to the pink shaded area or higher, and that would be within the pattern of the trend. If it breaks the green zone, 95.10, then the better possibility is that it takes a turn back down to the purple zone again into the mid 94s. Of course, the long-term black trend line is something that we want to look at as a potential support as well, but very interesting area right here at the green shaded area. Zoom it down to the 4-hour time frame. Doesn't really change it, just gives us a little bit of a different perspective on this. You can see the market above the green zone now zipping back down to it as support. We've seen historical resistance here before. I'll just put a quick circle back here. Resistance here. We see resistance here. So there has been resistance here before. We've actually seen resistance here as well after this little bump above right here. So we've seen resistance here before. What that means is historical resistance helps us identify future support. We could take some Fibonacci real quick from the low to the high, the closest low to the closest high, 382, sitting right around, kind of hard to see it because that line sitting on it, what is that, 95.25. So it's sitting right there, 95.25 area, 382 of that short leg of the trend. So we've retraced into a retracement point. Again, we expect one of two things. It's either going to hold here and wait for the bank holidays to be over and go back up, or it's going to break here and continue to go lower. Definitely use some caution during this bank holiday season and the limited market movement that we might see, but definitely want to see this franc hold the green zone as we wait for the next surge of buyers for the dollar franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.